Portseido, Legends Under the Lens. EP1. Warren Buffett. Ever wondered what Warren Buffett's portfolio looks like from the inside? Not just his famous stock picks, but the actual performance behind each decision? Today, we're diving into years of Berkshire Hathaway's publicly available trading data, loaded directly into Portseido. Let's jump in and see how his investments have performed. Quick disclaimer before we dive in. We're using publicly available 13F filings starting from 2013 to build this view. The dates and prices are approximated to end-of-quarter data, so it's not perfectly precise. And we've removed the impact of cash holdings from our analysis. Buffett famously struggles with having too much cash to deploy. When you're managing hundreds of billions, even a $1 billion investment barely moves the needle. Focus is mainly on large-cap stocks since smaller ones aren't big enough to make a meaningful impact. For this reason, we're using time-weighted returns as our calculation method. The first thing you can notice the big number, $266,000. But here's the thing. You need to multiply this by 1 million to get the real scale. We're actually looking at $266 billion. At a quick glance, you can see the steady upward climb, the occasional dips, including that sharp COVID crash in early 2020, and the strong recovery that followed. So just like any other investor, even Warren Buffett experiences ups and downs. Here's the key stats. Beta of 1 means his portfolio moves almost exactly in line with the market. No wild swings. As we mentioned about the crash, you can see exactly when the portfolio hit its lowest point. Maximum drawdown was at 39%. In short, even Buffett wasn't immune to major market crashes. And it's impressive that he stayed disciplined through more than a year of underperformance period. So we know the overall performance. But what exactly makes up this portfolio? We can see some familiar names in his top holdings: Apple, American Express, and Bank of America. Just these top 3 stocks make up more than half his entire portfolio. Even more revealing is the sector breakdown on the right. A massive 40% of the portfolio is in financial services, with another 25% in technology. The portfolio concentration is pretty striking. Apple is his largest holding, making up 24% of the portfolio. You can see total return column at 1000%, which include realized and unrealized gain, as well as dividend. Looking at the price chart, most of his purchases happened between 2016 and before 2019. But since 2024, he's been doing a lot of selling. This shows he doesn't hesitate to trim positions after significant gains. Now for the question every investor asks: am I beating the market? The performance page is where we find our answer. Buffett's portfolio annualized return is 10.87%. Interestingly, the S&P 500 did slightly better, with a 12% annualized return. That means over a decade, even Warren Buffett didn't beat the market. However, over the last 5 years, Buffett's performance is better than the index. Let's break it down even further by looking at the annual returns. In some years, like 2019, Buffett beat the market by 10 percentage points. But in 2025, he's trailing the market by 7%. Trade analysis. This chart reveals Buffett's trading patterns over more than a decade. You can see both active and passive years. During the 2020 pandemic chaos, he made his highest number of trades at 101 total transactions. Compare that to 2025, where he's becoming much more selective with only 17 trades so far. 2024 was particularly notable. He hit a record $176 billion in sell value. Notice how sell values consistently exceed buy values in recent years. He's clearly been a net reducer of equity exposure. Looking at portfolio turnover, anything under 20% typically signals a buy and hold strategy. Even in his most active year, 2016, Buffett stayed well below that threshold around 14%. This data reveals something important. Buffett isn't as set it and forget it as people think. He's constantly fine-tuning and optimizing his positions. This right here is one of Portseido's most powerful features. It analyzes every single trade. For each trade, it shows the total return. But it doesn't stop there. It also calculates what the S&P 500 returned during that exact same holding period. Take the famous Apple trade, for example. The earliest transaction in 2016 achieved a 684% return versus 208% from the index. Now that's what you call true alpha. This chart works with all asset even you've sold out of. Notice the win rate, and more importantly, the win rate versus S&P 500. This is the ultimate feedback loop for an investor. For many investors, especially those following Buffett's approach, dividends are crucial. And of course, Portseido has this covered. 29 out of his 39 holdings pay dividends. That's a beautifully diversified income portfolio. Passive income of nearly $5 billion a year. Honestly, that's a nice thing to have. The yield on cost at 3.25% tells a powerful story. It's significantly higher than the current yield of 1.81%. This means Buffett is earning 3.25% in dividends based on what he originally paid, while new investors buying today only get 1.81%. This perfectly illustrates the power of buying quality companies early and holding them. The donut chart reveals which holdings are the real dividend powerhouses. No surprise to see Bank of America, Coca-Cola, and Chevron leading the pack. Going one step further, there's a chart showing both received and upcoming dividends. At a quick glance, you can see he's getting quite the Christmas gift in December with those large dividend payments. You can also drill down by selecting individual stocks. Look at his Chevron holdings. They've been incredibly consistent, contributing around $200 million every single quarter like clockwork. Note that the gray bars represent estimated future dividends that haven't been confirmed yet, and the green bars show dividends that have already been paid out. And that's a wrap on our first episode. By analyzing Warren Buffett's trades on Portseido, we've discovered some key lessons. Even a legend like him can experience huge drawdowns. So what we think is most important? Keep investing, especially during downturns. Want to see another investor's portfolio analyzed? Drop their name in the comments below. Whether you're managing thousands or millions, tools like Portseido are essential for smart investing. Analyze your portfolio like a pro. Try Portseido today.